Eric Mwatha, Mwatha.com, September 22nd, 2016. Let's take a look at markets here right now with about, let's call it 4 hours to go before the close. Take a look at markets slightly to the upside, if not a good move here, especially the NASDAQ, which is recording all-time intraday highs as we record this. So let's take a look at those charts. We begin with the NASDAQ weekly. As of right now, we are pushing above this previous weekly closing high, previous weekly closing high. And for the NASDAQ, that level there is 5249.50. Anything holding the market above that level gives the bulls the chance to continue pushing high. In other words, holding and breaking out above the previous weekly closing high is actually very, very strong intention, or at least a sign that the market wants to move higher. If the market moves back below this number, then we can start looking for reasons to be bearish. But for now, blasting above the previous weekly closing high is what the bulls wanted to see, and it's exactly what they are getting. Now, if you take a look at the daily, and it's going to be a theme across this video analysis, is on the dailies for most of the charts, we are coming back to a resistance level. You can see on the NASDAQ coming back to this line that previously gave a short-term resistance level here of the highs of September right there. So this could be a problem as long as this line continues to hold the RSI as resistance. This should suggest that the next meaningful swing trade now could be pointing down. In other words, the NASDAQ would have to clear that resistance if we were going to see higher prices beyond today's close. Now there's a real fight going on, and I'll show you it's a weekly versus daily chart. And you take a look at the Dow, the line we've been drawing here. The Dow is coming back and tagging that line and bouncing very nicely, which is very bullish. The last time we also bounced back above the 50, which was this period, the market would go on to record new highs. So as long as the Dow is bouncing off this line and bouncing off the 50 weekly RSI level, the suggestion here is we should not be surprised if the market over time records new intraday highs, maybe even weekly closing highs. So the key is, as long as this line is holding, as long as the weekly RSI support at 50 continues to hold, one can expect fresh highs as far as the Dow is concerned. In the short term, there's some short-term resistance, and it is the daily chart again. And this is a theme across many of the charts, coming back here to test that line. And as long as we are below that line, the market stalls. There's also another line coming off the previous support line here. Support, support, support. We had uniform activity below the line, back above it, so we can continue to draw the line. And what I'm getting at here is we are coming back to back test that line. So we got two lines right now holding the market from moving higher. As long as those two lines are showing resistance, we should expect this market to start pulling back from current levels. Take a look at the hourly here for the Dow, and again we see two levels of resistance. We go back to the previous top side on the hourly, draw a line. Actually, not to be honest, this was a breakout recently, so we moved above that range, which is bullish, right? Remember, we're talking about the wedge that the market had formed coming into yesterday, and we broke out above that wedge. So this wedge breakout looks good, but it's actually, or coincidentally, coming back to test the previous break. Just how markets tend to play around with. And here, take this line here. This line was also that break right there, and that break was instrumental in bringing the market off the highs there. So we know that break was decisive. And here again, you see that what I'm getting at is on the hourly for the Dow coming back to test that level. As long as that resistance is being shown, we can expect that the market starts pulling back around where it hit the highs for the day today. Same thing for the SPX. Take a look at the weekly. The weekly is showing life, good support. And in order to understand what's going on here, for those of you who are new, let's take a look at the 3-year weekly for the SPX, so you can understand where this line is coming from. The top side previous resistance line was a good entry recently here for this movement to new all-time highs. So we extend that line, and you can see as of right now we've bounced on this line. We went below the line, back above it for this re-entry zone. So this is very bullish. And also there's another line connecting the previous recent lows, just like the Dow. Draw it like that, and the market is bouncing on those two lines. So the weekly here showing signs of life, suggesting that we should be expecting the SPX to do what the NASDAQ is doing and go to new highs. Now the challenge is short term, because on the daily, and I think this is why we should actually hold off from buying new breakouts around here. That's just my opinion, because we're coming back to test the recent highs on the right there on the S&P 500. On the daily, that line needs to be violated to the upside if the market is to move higher. On the hourly, you can see that it is just like the Dow. Short term, if you take a look at where the break took place, in that break brought the SPX off the intraday highs on an hourly chart. So we draw a line from here, and this is where the market has come at the highs of the morning, hit that line, and we're already showing signs of pulling back. So what I'm getting at here is, again, we need to be above that red line if the market is to make new highs. But at this rate, with the resistance, we can already see the market is starting to pull back. So hourly charts and daily charts are putting pressure on the market, or putting a ceiling on the market. And until we move above those daily and hourly resistance levels, we can start looking for the market to pull back around here. And I say there's no need to be aggressive right now, and we just have to hold off and see what level of a pullback we get. We might get a shallow pullback, or we might get a deep correction, who knows. But around here we can hold off from being long. Like I always say, if you are just about to pull a trigger and buy something, you are just about to buy 100 shares. If you really feel like you need to, you can go ahead and buy, let's say, 20 shares and see what happens, because you might buy the same stock a little bit lower if the pullback we are discussing here on the daily and the hourly takes place. So you can still be long, can still initiate long positions, but you don't have to be aggressive, is what I'm trying to say. And by no means right now do we have any reason to be absolutely bearish. There's no reason on the charts right now to be pounding the table being short, because the NASDAQ is breaking out, and that's a big deal. Now, if we take a look at the monthly charts, go with the monthly chart for the SPX, we can see right now it just turned positive a little bit, about 0.18% higher. And as long as it's positive for the month, this is good. Okay, so let's keep this. If it goes back to being negative for the month, then we are back to a situation where the market still looks bearish month to month. That's the SPX. Take a look at the Dow. And as far as the Dow is concerned, it is down for the month, albeit by about a point or so. As long as it's negative for the month, we're still looking at a monthly chart that points to a down market. The more it moves to the positive and clears the previous monthly closing high, the more the bears, the more the bulls are in control. In other words, being positive for the month is great. As long as we are down for the month, you have reason to suspect that the current move is a trap for bulls before they turn the market down and move it lower. Now, one of the markets that has been positive the last couple of days for the month has been the NASDAQ, continues to be the NASDAQ. The NASDAQ is up 2%. That's huge. So the NASDAQ is giving bulls reason to continue expecting higher prices for the SPX and the Dow. So this is a good situation for the NASDAQ. As you can see right now, without anybody adding any kind of opinion on the NASDAQ, we can say confidently that for now the market is still breaking out on the monthly, and successfully so. as it continues to show this nice breakout over the last 3 months. So the NASDAQ is the most bullish on the monthly, suggesting that we shouldn't be too surprised that if the SPX and the Dow turn positive for the month, that they also are going to be screaming to new all-time monthly highs, all-time intraday highs. And again, here the issue is the hourlies and the dailies that are stalling the market from moving higher in the current real-time situation. Take a look at other markets that are also pointing to short-term resistance. We go take a look at the USO, which tracks crude oil, and here just want to show one line, maybe two, one or two, maybe two. Anyway, here we go. Got topside resistance coming in play right now. Keep in mind, coming into this week, we were expecting a little bit of a move higher in the USO or crude oil because of this situation where we had improving technicals with declining strength. So this recent move here is not really a huge surprise. But now I think we're coming back to test the top side of the hourly charts on the USO and crude oil. Also coming back to test a recent break. And what I'm seeing here is it suggests to us that we should now start expecting a pullback after a recent attempt to move higher. Those two lines are definitely putting some type of a resistance on the USO and crude oil. As long as this resistance is being respected, we should expect the next swing trade for this sector of the market to be lower. Take a look at the GDX on the hourly. And here again, we see the same type of a situation where we got topside resistance coming in play for the GDX. Okay, I can draw it this way, or connecting the last 3 points like that, all of them pointing to resistance. Or we can also look at it from a different point of view, figure out where this high came to the high, where was the break. I'll try that color one more time. So the break there, and we can see that it comes off this break. And if we extend that break line, we get this highs resistance there on the red line for the actual highs, resistance here, early September for the highs there, and now here, uniform activity above the red line back below it. Now this is also true if you take a look at the GLD, the hourly chart. Oops. GLD. All right, here, so we got two levels of resistance. We got top side connecting RSI highs, and you can see the market hit that level and is showing signs of a slight pullback, showing that it is respecting that line. And then also figure out where the break took place off the highs, let's say there, and you can see that was the break. Since then, draw a line from there, and you can see we've hit that with uniform activity rejection for the highs there, and now we are doing the same thing, suggesting that as far as the GDX and the metals and the mining complex, somewhere around here after recent move off the lows here, we might have run into resistance. Take a look at silver SLV on the hourly, and on the hourly here you got topside resistance. We've hit that line there and seem to be stalling. So hour to hour, I say we don't chase, we can wait for a pullback. And what I mean by that is, let's say if the pullback just brings it here and then a move beyond the recent highs, then you can be looking to at least add on to positions or initiate positions after the pullback, instead of buying here when you can see evidence, visual evidence, that any stock you buy in the sector or ETF in the sector could be giving you a low opportunity entry point. So no need to be aggressive at every time in the market. Sometimes you can just wait for things to play out. Let's take a look at what is the bigger picture, and it is on the weeklies. The weeklies look absolutely fantastic for the GLD. As we discussed, take the recent lows line, even something like that. We've bounced on this line just like we did for the Dow and the SPX. This is good intention, suggesting that even these highs here could be taken out. So the weekly charts are really giving a good setup on a week-to-week basis. What the market needs to do here is to clear the short-term resistance levels, and the GDX also coming and bouncing very nicely on the 50 RSI level here is bullish. As long as this is the case, we see now that over time it might actually take out this recent weekly closing high. So the weekly charts continue to be solid. The problem is, again, like we saw for the Dow and the NASDAQ and the SPX, is the daily charts. As an example, take a look at the daily for the GDX. And the daily is coming back to show resistance and also backtest. So two lines, let me change colors there so we can see that clearly. So two lines, all of them coinciding right there. So day to day, that becomes a little bit of a trap. Keep in mind, we are trading just above RSI 50. If we get a reversal here that pushes this below RSI 50 on the daily, expect a big down day. Take a look at the GLD daily. And again, we are coming back to show potential for resistance. Simple lines connecting RSI highs, okay, coming into play, and also coming to test the recent break line of the highs. Now we know the highs were there intraday, and so we see that the trend break was there. That was not insignificant, because since then this break has been a problem spot. Draw a line from there, and you see that we've hit that line with the resistance for the highs there. We tagged that line there for the highs right there. We tagged it again for the highs there, and now we are back to that general area, suggesting day to day this is where the GLD and the mining sectors might have a problem. Now I want to share one chart for you, and it is the monthly chart, because the absolute signal here is what the GLD can do. And the key is this previous monthly closing high, and that's the big deal. In fact, the takeaway here is, if we see the GLD move above 128.98, one has to absolutely be bullish and be long that sector. In fact, even you can be aggressive, an aggressive buy of the sector. So a monthly breakout would absolutely be fantastic for bulls. Now keep in mind, the high is 129.08. So it's so far it has attempted to move above this number, but still not above it. But the key is, if it can sustain a move above 128.98, you absolutely positively have to be long the sector. Why? Because it would be moving to fresh 3-year highs on the monthly RSI, and also would have a chance of moving above 61.8 for the first time in years. That's very bullish. At the same time, we see that our MACDs are already trading at 3-year highs, and also moving above 0 for the first time in many years for the default MACD setting. So here the idea is, above 128.98, one has to be absolutely pounding the table as far as the miners are concerned. Staying with the commodities, take a look at natural gas, UNG. And UNG is attempting a breakout here on the weekly. So you can see that it is trying to move above the recent weekly closing high, and I believe the weekly closing high for 2016, and the level is at 8.85. Right now trading at 8.88. So it needs to stay above that if it is to see higher prices, okay? But I see a problem on the daily, and the problem is short term, and I believe right now you can see it, is we had this move to fresh daily highs, or short term improvement in price highs, but the RSI made a lower low. Okay, I think that's not a good setup. There's also another line connecting previous RSI lows line. This line here was support, was broken there. We extend that line, gives us a lot of information. Resistance here, twice actually, for the highs here and here followed by a shallow pullback, resistance here for the highs there, followed by a shallow pullback, and now coming and making contact with where it is stalling right now. So I would actually say around here I would be looking at KOLD, and this one is always a tough one because it's 3 times bearish, and 3 times bearish ETFs are weapons of mass destruction. But anyway, so I would consider this to be buys as long as UNG fails to hold above 8.85. So if UNG is back below 8.85, I would go long either of these instruments, because this failed breakout on the weekly and also this setup on the daily suggests that right now it might be looking like the next meaningful direction is lower for natural gas. So because the theme for this video has been resistance in many of the daily and hourly charts, we are not, or I'm not right now looking to buy anything or encouraging anybody to buy, but these are the stocks that I am watching as of right now. All these stocks look good. It's about 30 of them. Don't worry about which one is better than the other, because by the time I feel the market is oh, by the way, this is one that was a previous pick and is breaking out. I think the buy point is somewhere about 6.8, somewhere on there, close enough, but it's breaking out. Looks good. There's one you can take a look at. All of these stocks meet the minimum requirement, all of them. And let's take a look at, just so we can have them in the video here. All of these are either, they should all do well, especially if the market can clear the resistance that we are discussing here. All these stocks are going to be on fire. Here's another one that was a recent pick, continues to break out here after some difficulty, but now is acting very well. So all we need here is for the market to clear the daily and the hourly resistance, and all these names are going to be in play. The charts look fantastic. All we need is market to create an environment where they can move higher, but the charts themselves are solid. All of these are great looking charts. Even the Russian ETF RSX, which has been on our watch list, continues to, we can say that the buy point is somewhere here at about 19, needs to stay above that to continue pressing higher. The RSI and the MACDs are at 3-year highs. So the Russian ETF RSX is one that we can continue watching, and all these names look good. The only thing we are waiting for here, here's another recent pick trying to break out. I believe the buy point was 9.4 or thereabouts. Needs to be above that level if the monthly chart is to continue pressing higher. It needs the general market to help. Here's a steel stock that needs to break out. Of course, the breakout is the recent monthly closing high, and I should state that if you want to own any of this, they need to clear the recent monthly closing high. Here the monthly closing high should be at about 20.20, in that range. Needs to break out, otherwise you don't want to buy anything that is not above the buy point. Even the sugar ETF SGG here is moving above the recent monthly closing high. So all this look great. SLW or silver wheaten is breaking out just under 28 was the buy point, is above that level. So this one is breaking out. If you want to own silver, if silver can clear the resistance on the daily and the hourly, that's one to watch. Look great. All these charts look great. And again, I should be sending you a shortened list out of this group once I figure that the hourlies and the daily charts have been cleared. So let's conclude this. Once the S&P 500 can clear this resistance, the ideas mentioned here should be in play. But for now, little bit of a resistance short term, and also the S&P 500 on the daily needs to clear this top side resistance line before we can add on to the ideas mentioned here. Eric Muather with Muather.com. As always, good luck, peace, and blessings. ESCS. Mwah. 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 Oh, yeah, that's the SPX. I am out.